What's happening, guys? It's Max here from Silver Equity Partners. This is just my second YouTube video across my entire journey of YouTube, and I gotta tell you, this is by far the best experience I have ever had within social media. I mean, I have the opportunity to share my insights, the opportunity to share my knowledge with everybody, with the general public, with the world. So what I wanted to talk to you about today is a topic of discussion that is, fairly ignored across the board of finance. And when it is looked upon, it's not typically understood as it should. Okay, so I'm going to briefly explain what the factors and what aspects of this topic of discussion involve and how it correlates to intraday day trading, investing, etc. So the topic is how psychology, so how psychological aspects intercept, how they correlate with the financial markets, how they correlate with the overall economy. Okay, so we have economic factors like the HDI, the Human Development Index, the GDP, which, believe it or not, does take in living factors and living customs, but that's besides the point. So I'm gonna briefly, like I said, I'm gonna briefly explain what the psychological aspects are actually comprised of and how they further correlate to money flow. So the basic theory of supply and demand involves two main factors. There's a buyer and a seller. Okay, the buyer wants to buy something for a discounted price, preferably, and the seller wants to sell an asset at the most expensive price possible relative to a benchmark. Okay, this is all to ascertain a value that will better suit each party. Okay, whether you're buying or selling an asset. So, supply and demand, there's what's known as an economic equilibrium, and within this equilibrium, there's an interception between the buyers and sellers, and that is typically known to be the preferred price. That's known to be the kind of mutual price that both buyers and sellers agree upon. Just like in buying and selling an asset, you could take this with any kind of colloquial event, such as a negotiation, such as even a conversation. Okay, when two parties or two or more parties are having a conversation, without their sense of knowledge, they're actually competing with each other. Okay, whether they're talking about sports, whether they're gambling, whether they're whatever, it doesn't even matter what they're talking about, because inevitably it's all about competition and how people perceive with that, whether rationally or irrationally. So if you put that kind of sense into the markets, okay, so we have this one thing called level 2 quotes, which it's comprised of a buyer and a seller, the quantity of how many buyers there are, quantity of how many sellers there are, and etc. So it's a very great indicator, really the only indicator I personally use in day trading, as well as time and sales. I don't use moving averages. I don't use patterns as much as these gurus indicate to the general public. Okay, it's just not necessary, and the number one reason why I don't use them is one reason only. It's delayed data. Okay, the only thing it provides is maybe a confirmation of what the trend will proceed with, what the trend may or may not do. So, psychologically, there's a lot of aspects, much more in depth than I just covered, but there are aspects that inevitably cover the entire frame of finance, the entire frame of money flow from point A to point B in terms of transaction, in terms of one person buying and the other person selling that buy, and vice versa. So once you understand, okay, I urge to my students all the time to understand level 2, to understand supply and demand before even getting to the patterns, before even getting to the strategy itself. Okay, and it's a lot more simplistic than you may think right now. Okay, because right now I'm talking I'm throwing a lot at you, okay? This is called behavioral finance, and behavioral finance is a very complex study, okay? It's gone back to as far as Adam Smith. He wrote The Wealth of Nations in 1776. That's really when the first time somebody covered behavioral finance. Going to Adam Smith, as a matter of fact, you could call him a kind of benefit or a kind of believer in a democratized wealth being. Okay, he believed a lot in the free market, and in today's world, it's a lot more complex with that, especially with monetized or modernized regulations, government's proceeds, all that. But my point is, with day trading, whether you're trading forex through equities, it doesn't matter what you trade. You have to understand supply and demand, okay? Because I'm telling you right now, through experience, you have to understand the behavior of a trend in order to determine which way that trend may or may not go. Okay, so this is what I wanted to point out. If you want to learn more in depth of what I'm talking about, just for starters, definitely read The Wealth of Nations by Adam Smith. Best book I've ever written pertaining to behavioral finance, and it's the oldest one. The second thing I urge you to do is check out our website, check out our other YouTube videos, and see what you can grasp from what I have to say. What can you further learn, and what can you expand on pertaining to day trading, for free, as a matter of fact. So, with that being said, students of mine within the trading room, they're learning. They're learning a vast amount of information every day because they get to see how I trade, what trades I take, and when I take them. So they have that luxury to see me trade live. They have that luxury to not only duplicate the trades to potentially make thousands of dollars, but they have the potential to gain knowledge off of those trades I make. Okay, if you back test those trades, if you understand why I took them, and etc. So this is really all I have to say. Again, it's really all about behavior. It's all about supply. It's all about demand. There's nothing really more to it. Okay, because at the end of the day, the market is comprised of people. The market is how do these quotes, how do these stock prices appear? It appears based on the buyer and seller's mentality, what their mindset is on what positions to execute. Okay, so this is all I have to say, guys.